You're back again.
Yeah, we're back again. All right, so this week
39, right?
week 39, right? Wow.
Yeah.
We're
You have like
gradually pushing forward.
gradually 12 weeks to go, roughly.
Yeah, that's right. All right, so well, we're gonna just kickstart everything with the fundamentals just behind the index, the DS, the dollar, DXY, right? So last week thereabout, we had unemployment data, right, coming in, and then it looks like it came in very well. It came in good. We had good numbers coming in for unemployment claims, right? The forecast last time we had. Last time it was 264, and they forecasted to get 241, and then it came in 2.8. That's a good. With this alone, we expect that we get blue or green candlesticks printing, bulls pushing the dollar to the upside. So let me just quickly just go back, check the charts. Let's see. Right. But then already, the US is kind of dealing with some issues, right? Dealing with some issues. We're seeing that jobs data, that is the number of getting in the US is slowing down, right? So people are not getting jobs to do, right? Majority of people are not getting some jobs to do. So we have jobs slowing down, right? And then we have inflation. They're also dealing with inflation, right? Inflation is kind of sticky, a little climbing up a little bit, So that's to tell us that prices of things, goods and commodities are also climbing higher, right? That's why we are seeing that the dollar on a larger time frame, right here, we're going all the way down. And this also really prompted the rate cut issue. We have got that 0.25 rate cut. Oops, sorry. my marker is messing up. 0.25 rate cut. Okay, we have got it. And then naturally, since we are cutting rates, we're expecting the dollar to continue to tank down, to continue to go down, right? But then why are we getting the dollar getting some sudden strength to the upside, And this is attributed to that jobs, the unemployment claim data that came in last 2 weeks, right? It was good.
Yep.
Okay. It was good. So on the short term, we can expect the dollar to push a little higher, right? We can expect the dollar to push a little higher. Let me just draw something real quick here. All right, so we can expect the dollar to push a little higher. If the dollar is able to break this resistance right here, there's a resistance at this key level, right? That's the 97.64646 level. Yeah, so if the bulls are able to push price a little upward here and make some higher highs, higher lows, then we can expect some drops on the euro, the pound, and those other major pairs, right? Yeah, that's just for the short run. But then I still think we are still in a bear market, right? With the dollar, we're still in a bear market. So until the data really changes, right? Until we get some good data coming from the US economy in the subsequent months that are coming, if we start seeing some higher highs, higher lows forming, then we can be confident and say, okay, we're now shifting from that small bear market that we're having here in the dollar, right?
Yep. Around that, I think it's just still going to be what you've seen from earlier.
Exactly. So right now we're just going to just relax and see what's going to happen, right? So are you looking at any other are you looking at some other currency pairs?
Oh yeah, just like the ones you're looking at. I think what you've mentioned work hand in hand with kind of the analysis I had, or like the analysis I looked at this week. So based on this, the inflation and then the jobs data that we have, I think it's fair to look at the pairs EURUSD GBPUSD, and then also USDCAD and then USDCHF. So those are the ones I'm going to kind of pick on.
Okay.
Can I share my screen? Is it possible?
Yeah. Let me just drop my screen real quick, then you can share your screen.
Okay. Shared. We are going to look at these 4 pairs for my end, and then maybe you can you take it from there, right? So I think if you go on the longer time frame, that is, let's first start with monthly. For the monthly, it still looks like we could still be in a bullish market for the Euro USD, right? But from the data that we had from last week, there could be a possible reversal. And looking at the chart we have over here on the monthly, we have a Gatli. So that is also prompting of a potential reversal. That is, for the Gatli chart, we have this formation on the Gatli. But yeah, we have to look at it in the shorter time frame to pick our entries, right? So we have something that looks like this on the monthly, which is this is a strong bearish reversal sign. So let's not first focus on this one. We can go on weekly and then see what is happening also on weekly. So weekly, we have the reversal candle forming over here, over on the weekly, which is also going on to confirm the kind of pattern we saw from the monthly charts, right? So this illustrates the potential reversal in the market in conjunction with the fundamentals that we had from last week's data, right? So that is also confirming our analysis from there. Then we have to go to daily and then maybe the 4-hour chart to look at entries. So let's look at the daily. The daily, looking at the data we had from Thursday, that is Wednesday, Thursday, and Friday. It looked like we are currently turning from here after picking these highs. Actually, there's a sell-off over here. So this is prompting us, or kind of confirming our monthly and weekly analysis that we had from those time frames. Then now, since we've seen this, you have to look at entries, right? Entries. That is, if you are going to sell, where are we going to put our entries, like entries, take profits, and stop loss? So with this, we'll descend down to H4 and then H1 and see where you can put our entries. And this chart actually also works for it's just confirms for both Euro USD and GBP USD, like for both of them. Yeah. So looking at this candle we had over here, this bullish candle to the upside, right? It's kind of had a lot of momentum. And then we have to look at the fib level, like the 50% fib level for this particular chart. So looking at that level, we're going to put our entry at like 50% of this strong bullish move. So any area, any trade returning back to this region again will be a potential entry price for the entry for the sell. So in this trade, in this trade, you're having our entry around 1820, or between 1820 and then 1830. That area, that region. So anything over here, and then we're looking at a 29 pips stop loss. So this is more like 1 to 4, but you might also look at you can also look at 1 to 2 raised to 1 to 3. But 1 to 4 is ideal for this trade. So if it's 1 to 3, then it should be the ideal positions we are looking at. That is, if you are going for 1 to 3, then it's going to be somewhere over here. Stop loss being somewhere over here, and then I'm trying to calculate the 1 to 3 where the TP is going to be. If you are doing 1 to 3, then the TP should be maybe when it moves back to where it is right now. Yeah, so somewhere over here.
Yeah. I mean,
so this would be like the ideal trade that you'll be looking at. The same 30 pips stop loss, and then we are looking at a rod of or a move of 90 pips to where it currently is right now. Yeah, so if you are taking this, we can put your TP1 or TP1 over here. Then maybe if you move across it, you can throw your stops or anything like that. So this is going to be the ideal trade for EURUSD, and then GBPUSD also have the same kind of format, just like this one. The same thing. We are expecting a move back into this region where we are going to sell and then take profits at this area. But the GBPUSD looks like if that's going to move, then it's going to move way far. So I think for that one, we're looking at what move were we looking at on this one? I want to see the numbers. Yeah, the same to 1 to 4, but ideal case will be like to look for just 1 to 3, right? Yeah, so that one, the entry is around somewhere 1.3608. And then if you're looking for a 1 to 3 risk to reward, then that is going to be around, let's see, let me look at 1 to 3, the calculation for the numbers. Right, so 1 to 3 will be somewhere. So this is going to be our stop loss, and take profit is going to be somewhere. Yeah, somewhere over here, right? Which is a little bit below this price. Yeah, roughly. Or maybe this region, around this area. Yeah. If you want to, you can just throw your stops when it gets to this region and then see what price has to offer. But taking this trade, what the caveat on this is, maybe you have to wait until Monday to see how the candles close on Monday to confirm this position, right? Because however the market is going to play is what is going to give us the idea to kind of trade this, right? So on this trade, I would actually have to wait for the close of Monday. So it's likely that this trade, if you have to take it, you have to take it on Tuesday or maybe Wednesday, depending on how the markets move, right? So that is for the two. The next trade is going to be USDCHF and then USDCAD.
Okay.
So USDCHF and USDCAD. First, starting with USDCAD, we are saying that they had. If you have to go on the monthly, monthly look messed up right now. The monthly looks like we are still bullish. We had a reversal, a retracement, sorry. But it's still bullish on the monthly. Yeah, we had a retracement. Yeah. So for this one, it looks like we are still going to keep going high, keep going up. So that is the analysis. And this also confirmed the fundamentals that we had, right? It still looks like the dollar is going to be bullish for the coming week.
Exactly.
And then going back to weekly.
Speaking of fundamentals, the card also had some terrible data coming.
Yes. The data. The card data. Wait, what fundamental was that? What was the news? Was it a CPI?
Yeah, it was CPI. Yeah. They had high inflation, and then their
GDP that was terrible. Yeah, that was terrible on the side of the card. So it's weak at this moment, and hence you might be seeing a lot of buys on it. But before we take that buy, we are looking at the reaction opposite to the fundamentals that we had for the USD, right? So possibly you might see some sell-off happening on Monday before we take this long positions, right? So sell-off to the region around 1.375 area. Then that's where we're going to have our entries, right? So any drop between that region will be a very good point to kind of buy in, and then we take our profits at around 387. So like roughly, yeah.
Right. 1 to 3, right?
Yeah, 1 to 3. In that case, 1 to 3 risk to reward. And then the major part will be to look at 1 to 4. Yeah, that is, if you reach this region, we can just throw our stuff, but it will be good to kind of exit this trade over here. Yeah. I mean, you don't want to be greedy, so just exit anything around this region and then you're good to go. But if I was taking this trade, it's just going to be, I have my exit over here, take profit over here, and then that is it. If it reaches it, you just move and then you look for another trade for the following week if you're not going to trade this multiple times. Yeah. So that is for USD CAD. Then we have a similar pattern on USDCHF. USDCHF looked like it went to a very long time low. So if I'm to go to the weekly, we actually approached a long time low that week. It was crazy. See them move. Yeah, we go to that region, just price just bounced off and then bounced off base of the news. So for this, I'm expecting that we push down before we kind of again. So maybe we might wake this the end on this and then just keep on going high, keep on going up. This was a long time low. A long time low. It goes way back to 2013.
Wow.
Yeah, we haven't visited that area for like 12 years, I would say.
Wow.
So going over there means there are a lot of buys in there. So the institutions will also buy from there based on the fundamentals that we currently have. So yes, that is a very good order block to kind of pick this trade in. Yeah, this region was price traded over here is like since 2011. Yeah, 2011.
Yeah, price never came there.
So yeah, that's a very interesting region to kind of trade USDCHF in. So just going to have this and then buy in there. And these buys might just go up high and high, but we're going to pick our first trade over here. We exit it and then we look for another opportunity to buy again. Right. So for this one, going to daily and then to the H4. This is how the daily looks like. Oops, my network is lagging. Yeah. So daily we had price buying for Wednesday, Thursday, and Friday, but Monday we expect it to have like some kind of reversal before we kind of go high. So maybe Sunday when the market opens, you might see some rejection to the downside. Then it will be confirmed by Monday's sell-off before we pick this trade up high, like pick momentum and then go up high. So that is what I'm looking at currently for this pair. So
that are most of focusing. Yeah. So I will talk about the commodities, specifically the metals, and then also the indices. USDCAD and then the Nasdaq. So let me share my screen. You can stop sharing right now. As usual, I'm going to start from the fundamentals. I love the fundamentals behind it. As much as I love the technicals, I love fundamentals too. So with the issue of the rate cut, with the issue of the rate cut, what it means is that individuals are now going to get the opportunity to borrow money from the banks and stuff like that, so it can stimulate spending, right? And we know these big companies which constitute the Nasdaq and then the Dow Jones. These big companies, it is the same consumer, right? That is made up of these companies, right? So the stocks or the indices love the idea. They love the idea of the rate cut issue. As I'm talking now, the Russell is currently at all-time high, and then the XPS is also pushing up really high now, right? Nasdaq.
Yeah, I think it was six.
Yeah. Nasdaq is currently at all-time high, and then look at Dow Jones. Dow Jones too, another all-time high, just a little bit shy of the all-time high. It went there, tap it, and then it came right down, right? So let's talk about potential trade opportunities on these instruments. Okay, so this is a pretty straightforward textbook thing for the technical. If you take your Fibonacci from this level, swing to this side, I will be interested to buy just in between the 50% and the 51% trade level. And it turns out that that same place is also a support level. The previous resistance and has now become a support level, right? So if in the coming weeks, if we see some rejection at the top side and then the pullback, I'll be happy to buy here, right? I'll just put a stop. I'll put a limit order here, right? And then hope that price will take it and then we can push to the upside. But then if price gets to this side and decides to break through down here, I will take a loss, right? A small loss, a calculated small loss. And I'll be looking at this place, this next key level to buy.
Key level to kind of go in,
To buy. Exactly. So pretty straightforward. I think the same thing for the Nasdaq, the Dow Jones, right? Dow Jones. Let me look at the 4H. So Dow Jones on 4H. There's a trend line here, a beautiful trend line coming all the way from August till now, right? Beautiful trend line. And you can see that price has been making higher highs, higher low, higher highs, higher low. And then we are currently at a higher high, right? So the thing that we anticipate price is going to do next is make a higher low, all right? Pull back to this level, all right? Which also turns out to be a Fibonacci level. If I pull my Fibonacci at the swing low and I put it at the swing high, you can see that just right in between here,
it's like the 50% fib level,
exactly. Yeah, price came there to tap that side, right, and then push up. So I'm expecting and speculating the price might come to this side again, right, and then probably if I have an order there, take me, and I'll just look for, I don't know, I don't want to be greedy, right? I'm just
you have to control your greed.
1 to 2 or 1 to 3, a pretty simple one. I take my profit at this level, all right? I can put it here to make it 1 to 3, like 0.37. But then I want to put it here, just right here, okay? Just so I can see price smash to the upside. I like that one. If price smash to the upside, rather than just come and tap it a little bit. Nah, I don't like that one. You guys, so that is that for the industry. So for the coming week. Now let's talk about. Go ahead, man.
That's cool, right? You know, this week I've been so interested. I told you I started reading Max Ginter's book on the Zurich Atoms, right? And then whatever I learned from that, it's kind of modified how I look at the points where I have to take profit. And right now I'm not going for anything beyond 1:3. 1:3 is like the max.
Exactly.
If it's above 1:3, I mean, I'll just let it sit and then just be comfortable with my you know, that kind of profit. So talking about the trades you're going to take on the account, I'm thinking we should look at the two pairs, that is USD CAD and the USDCHF. Just have our entries on some market orders on those pairs, and then just wait for what the market will print on Monday. See if you have to take either EURUSD or GBPUSD, one of them. Remember, we are taking only 3 trades in a week.
Oh, yeah, that's right.
So if you are taking anything, if you're taking anything on USDCHF and USD CAD, then it means we have just one more slot for a trade.
Yeah. So I'm thinking that since we are picking USDCHF and USD CAD, that is two FX side, right? I mean the Forex side. Right, and then mind you, the heat map that I showed you, that I shared with you, we are having bullish signals for USDCHF and the USD CAD, and also gold.
That's a confirmation,
right? We're having gold as well. So let me just briefly talk about the gold and let's see if we can get a good setup on the gold. We can trade the gold as well. because right now gold is in high demand, right? Gold is in high demand. All right, so this one pretty simple technical. Well, let me start from the fundamentals as usual. Well, you know, gold is priced in the dollar, right? So gold, exactly. It has is it a negative correlation with the dollar? So if the dollar is dropping, we expect the gold to rise, right? And vice versa, right? Plus, we have geopolitical, stuff's happening. We have wars happening and all these kind of things. And gold loves those things. Gold loves those things. That's how come we're seeing gold exactly become a safe haven for investors. That's how come gold is rallying to the upside. And every dip on gold is getting bought. Every dip. You see, we had a dip here, and then we bought it. The dip here we bought. There's a dip here we bought, and even here too, they bought the dip, right? So gold is looking too stretched. That's fine. It's true. Gold is looking too stretched, but then I feel gold can still continue to push higher, right?
But don't you think? Let me ask this question. Don't you think with the emergence of the US rate cuts, don't you think that would motivate kind of investors to kind of take out their cash investments in gold and kind of invest it into the economy? Because if you are having interest rate cuts, it means people are going to be able to borrow. And if they are borrowing, then it's going to mean like more purchases, and then that means business will have to expand to kind of feed those kind of demands, right? So don't you think in the long run, the rate cut will mean that people will have more money in cash instead of just investing it in gold?
Yeah, I think you are right. Yes, in the long run, I think that should be the idea, right? In the long run, to find something to entice the investors to come back and put money in the U.S. economy, right? So but then I don't think gold is ever going to fall crazy and dip crazy, because gold is a precious metal. Okay. Exactly. Gold is a precious metal, and as you said earlier on, it acts as a safe haven, right? So if we start seeing the U.S. economy getting better, I think gold is going to be stuck in a range. Gold might be stuck in a range for a while until some geopolitical stuff happening, maybe Afghanistan and Russia, they start fighting and stuff like that. Then we can see some rally to the outside, right?
Oh, okay.
Yeah. So now
that is cool.
Yeah. So now to the setup, there's a price ceiling or a resistance around I think 3703, right? 3703.
Yeah.
If price is able to push and break that side, I'll be happy to purchase some gold at that level. Break and reach, at that side, and just look for 1 to 2 or 1 to 3. I feel by my target for the gold is 4,000, right? By the end of the year.
How long are you looking? By the end of the year?
Yeah, by the end of the year.
I could be wrong. Where is it at right now? It's at 3.37, right? Oh, it's possible. It's possible.
Yeah, it is.
4,000 is. It's really, really, really possible. It might even go beyond it.
Yeah, exactly. So I think I dropped it. That was like the last 3 weeks.
I mean, Ethereum is trading around 3 point something, right?
Oh, I have not taken a look at Ethereum. I only look at crypto.
Ethereum is. Okay. Ethereum is around already, so it's likely possible. Yeah, and we have like 3 months. Gold alone can do 100 pips in a day.
Oh yeah, man. You get it. So if we're able to break to the upside, I'll be happy for us to buy gold and just look for maybe about 3 pips. Or
you are on daily. You're on daily. Let's look at it on the H4 and then the 1 hour chart.
Yeah, sure. Wow, it's been a long time I visited the 1 hour.
if you are picking an entry, probably that's going to be what you're looking at, right? A close in that place, and then
Yes, exactly. Actually, on Friday, I think on Thursday, I took a trade on gold, but I didn't drop it on the page. It was a very
okay.
simple one. This
Let
I
me
saw this as
see.
a falling wedge. I saw this as a falling wedge. So when price moved to this side and retested here, I took a long position to this side.
Okay.
Yeah. But anyway, let's go back to the 4H. Yeah, so on the 4H, we've seen that price has just broken out of that falling wedge. If price is still able to push and break this resistance, then we can buy some gold at this side, this level. Let me just mark it. This level here, and just put a stop loss.
Oh yeah.
And walk up the stop loss, right? Then we can look 1 to 3 or 1 to 2. But then if gold decides to drop, right? If gold drop, because right now we're speculating some reversals, retracement on the DXY. Right.
Yeah.
So if that happens, then maybe gold can slow down and decide to give us a discount, right? Trade down, you understand, the retracement, and I'll be very happy to buy here.
To buy at that point, is it 148, 1487 or something?
Yeah, 148. Reason being that on the daily time frame, right? If you pick your Fibonacci from that area where the low here, this low here to the current high, and that is exactly the 50% and 51%.
Yeah. It looks like that level has actually also been traded in the past. It used to be a resistance and was broken.
Exactly. So it will be a very sweet spot. Yeah, it will be a very sweet spot for us to buy gold there. So I think that's pretty much what I'm looking on the metal. As for when that is going to happen, I do not know.
Yeah. So I think after doing this, we should take screenshots of it and put it on the Telegram channel. Yeah, maybe take a screenshot.
I dropped the setup on gold in Telegram, but not in the channel. But your personal.
Okay. Yeah. Let's just do that. Yeah. When we finish, we can just drop everything in there.
Sure. Exactly.
Yeah. So I feel like this was very insightful. Very insightful. Yeah. So
yeah. Same thing, man.
Probably if you are going to take the third trade, I'm looking at the first two trades to be taken on Tuesday, and maybe by then if you've seen a clear path on either gold or the EURUSD or the GBPUSD, we can share it and talk about it in a very short chat, and then we can have that position also open. What do you think?
Oh yeah, sure. So I love the USD card. Okay, I love the card so much. I think I might prefer it over the chef, the USD.
Oh yeah. Me said the one I'll just put that one running.
Yeah, reason being that the USD Swiss franc is in a monster downtrend. Okay. It's a monster downtrend. So like you're taking the longs, it's going to be against the trend, right?
The trend, the trend.
So we have
to so we should just keep the USD card open by maybe Tuesday, right? And then just wait on how the market will react on either USD or GBPUSD, and then maybe we add that one at some point. Yeah, but with this one, I'm looking at it, picking the USD card at maybe a 0.5 lot size. What do you think?
0.5 lot size. Okay, and okay, that's cool.
Yeah, we have like 21 pip stop loss. So even if you are picking 0.5, yeah, it's not gonna be something close to our weekly loss limit of a loss limit of a trade of being like 500 USD, right?
Yeah, sure.
So that's what I'm looking at. Yeah, 0.5 lot sizes.
Card, right? Okay, card.
Yeah, USD card.
So for the card, I'm looking at these levels, right? If we fail here, we can also try this side, right?
Yeah. So, what's the first level you're looking at? Is it 1.375?
Yeah, the first level is 1.377 around that side.
77.
The
Okay,
reason,
okay.
yeah, the reason why I'm looking at that side is because wait. If I pick my Fibonacci, right, and I pull
Yeah,
from the recent low to the high here, all right,
yeah,
just in between here where we had the rejection here, that small rejection is a 50% and 61% hit level.
yeah,
So I
yeah.
feel that time. Exactly. That's how come I'm looking at that.
I
But
think I'm looking
then,
at the 60. I'm looking at the 60. Is it 61 or the 8? Yeah, I'm looking at the 61 because I have my entry at 37. I have my entry at 1.375.
okay, 375. Okay, that's a little down here.
Yeah, yeah.
Okay. Yeah. That's okay. That's all right. That's all right. And I think, yeah, my stop loss should be a little bit wider, right?
My stop loss is like I think 40 pips down, so that is like
Yeah.
1.371. Yeah,
I mean, these stop loss are not like well calculated just for
yeah,
the
yeah.
purposes. So I think it's the same area. If we're going to get a candlestick, that would activate it.
Closing,
Probably make it.
closing. Yeah. So usually I'll look at the candlestick closing in the region and then take the trade.
So are you going to use a market limit orders or like market?
Yeah, I'm going to use limit orders, but I'm going to take them on Tuesday.
Oh, okay. You drop them on
Yeah. So
Tuesday.
if by close of markets Monday we have the price action traded in the region that we are region of interest that we have, then I might take market order. But if not that, by close of markets on Monday, I'm going to set the limit orders.
Oh, okay.
Yeah, and one thing I like about
What?
limit order is I intend not to pay so much in swaps and commissions, right? So if I send a limit orders and price comes to it, fine. That one you wouldn't have to pay a lot in commissions. Yeah.
Exactly. And also, what if by Monday, you know that anything can happen in the market. What if by Monday price comes there, right? It comes to that where the area we are looking at, and then we have not put any order.
If it comes there, I'll take it. I'll wait for a close below the region or in the region, and I'll take it.
Okay, cool.
Yeah. That's how I'm looking at it. Because you wouldn't want to have the setup and then you see because Monday didn't get there, you are not taking it. If price trades in the area there, we have to take it because we've done the analysis all right.
Yeah. And also, you can also be on the lookout for the euro, right?
Yes.
If price tends to play out like how we have analyzed, we should be taking that shot.
You should be taking it. Yeah. You should be taking the shots. Yeah. So if in case I'm not looking at it and you see it, you can just alert me. I'll just open my laptop and enter the trade. Yeah.
I will. Awesome. So I think we have adjusted everything.
Yeah. I think we've talked about almost everything on here. The only thing is we have to look at the risk management and everything very, very well. So usually what I'll do is if I have the entry and then the stop loss pips, I'll just give it to ChatGPT to give me all the levels. And it's very good at that.
Okay.
And it will just tell me how much you are risking if you have to hit stop loss and everything. Or maybe put it in the calculator, the financial calculators on my FX book.
Okay. Sure.
Yeah, that can also do
problem.
that. Yeah.
And also don't forget to document this on the
Notion. I'm documenting everything. I'm documenting everything. Like everything will be being documented. I feel like we should also have something on the Google Docs to kind of keep tracks of it because I don't want it to be in my book alone.
Oh, okay. Sure.
Yeah, but even with a book no cry, I can take pictures of it and put it on the Google Docs, right? Maybe pictures, and then I just put those pictures for. I'll name them like a particular week. So maybe not on week 39 Outlook. Can we put that one on the chat on the chat or on the platform?
Okay.
Yeah.
All right. Okay. So I think
nice.
we okay.
We'll end for today, and then we'll post the analysis on the analysis and the chat on the Telegram page. Yeah, and also the video we posted on YouTube. So if you're not seen it yet, you can just click the link and then go on to watch the video on YouTube.
Awesome.
Yeah.
All right. It was nice talking.
It was nice sharing the outlook. Yeah. See you on the other side.
All right.
Bye.
Happy trading. Happy trading.
Yeah, happy
Bye
trading
bye.
week. Yeah, happy trading. Bye.